Good evening, dear colleagues. Sunday, as always, is the day of shooters of the ForexTimes project, and as always, we are discussing the probable movement of several trading instruments for the upcoming trading week. Dear colleagues, I invite you to the community ForexTimes. Don't miss the awesome entries on WTI, crude oil, the dollar against the Canadian dollar, and the Swiss franc. The chic entries will be coming in the next week or two, so get in quick, don't miss it. Well, let's go with the euro dollar. The situation is as follows. At the moment, we are in a sell market. The stop loss level was set here, and at the moment, the position is already in profit, and the stop loss level has been transferred to break-even. According to the U.S. Commodity Futures Trading Commission, we see a 4% decrease in buyers and a 1% decrease in capitalization. Yes, we still have an uptrend, but the decrease of buyers by 4% hints at the continuation of the corrective decline of this trading instrument. Sunday, I talked about two levels that were burning brightly, and one of the levels worked out. That's why my decision to enter the market with the target reference point at the level of 10650 was made here. However, at the moment, a new level has appeared. In this situation, I assume that we will work out the level 10820 first of all. How? If the price reaches the level of 10820 rather sharply and on impulse on Monday, Tuesday, the first half of Wednesday, we are likely to see a corrective growth after that, after which we are likely to reach the level of 10650. Why? For the simple reason that if we take the global layout, we see a wave 1D, a probable third wave. It's a little bit of a 45 stretch here. Why do I say a little bit of a stretch? Because it is possible to put an owl on the globe and place a triangle here. In principle, theoretically, the first waves fit here according to the BC rules, and the third wave is not the smallest. Then we see wave A, probable wave B, and we really lack more, wave C. And this wave C could perfectly work off the level of 10650. That's why we're pouring in this variant at the moment. If anything, I said that the price on Monday, Tuesday, the first half of Wednesday, will reach the level of 10820, after which there will be a correction. First of all, I will close my position at this level. And after the correction, if there is an obvious corrective movement here, I will sell with the target 10650. If on Monday, Tuesday, the price shows growth, then I will probably place pending sell orders either under the base of wave A or under the base of wave B with pending sell orders, for the simple reason that this open order will be closed at break-even level either 10820 or below 10650. Gold. There was no problem with gold. There would be no problem at all if this movement was not an impulse, if the market showed a small corrective movement here. What did we do? We sold. For the simple reason that we have one corrective movement, there would be a second one. Actually, there is not enough E as well as in the euro. Dear colleagues, another downward movement is missing. Moreover, the decrease in buyers by 10% and the decrease in the capitalization of the trading instrument by 8% to 261 MP, $158 million screams to us. That is, buyers are leaving the market and have taken quite a lot of money with them, as much as from 260, not even 260, but much more billions. Here. However, there is a big one. However, at this point in time with sales, it's momentum. This is the momentum, and therefore, if we assume in the future that we have it, yes, I see differently. That's right, we have a wave. And then a B, the continuation of the impulse in wave C of the lower order of wave B, the higher order. And only after that we can think with you about selling in the wave from the higher order. Therefore, dear colleagues, at this moment, if someone has very strong itchy hands, I recommend to consider buying near the market maker's loss level of 2000. Well, let's say 20050. Consider buying in the hope that wave C of the lower order will work out in wave B of the higher order. However, after that, there is still a probability of decline, for the simple reason that the decrease in buyers by 10%, and most importantly, in capitalization by 8%, cannot be left without attention. If no one has itchy hands, you can try to wait and see how it all ends. And after the formation of a probable upward impulse in wave C of lower order, wave B of higher order, try to consider selling positions in this way. For now. Yes, by the way, you can also try to place a pending order above the level. Well, let's say above 24040 at 2050. You can place a pending order at 2050. Pending order, but after the price passes a small number of points. It is desirable to transfer the stop-loss level to break-even, for the simple reason that if it turns out that I am right and we have it, I apologize, and this is a corrective wave. And now we have a corrective wave developing. It won't take long for a corrective wave to come in. If you don't put your stop-loss level at break-even, you'll be blown away and you'll take a loss. Okay, now, dear colleagues, Dow Jones and the S&P 500 index, and I'm still talking about considering selling. Of course, we consider selling exclusively after the occurrence of a pattern to sell, and if on the Dow Jones index I am still talking about the level of 31,000, I will still talk about it for quite a long time, because it is hard to change my mind when I see where the interests of professionals are and where they are at the moment. That the index will continue to go up, 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 and up. But let's turn to the S&P 500 index. And there is quite a large and good positive correlation between the S&P 500 index and the Dow Jones index. Please take a look at what we're seeing and hearing on the S&P 500 index at the moment. And the thing is, you know very well that all these numbers are nothing but option contracts. At the bottom, I have call option contracts, and at the top, I have put option contracts to sell. So the point is that already at the 4,800 level is the hedge level of the call options. And this is the level of maximum open interest in call option contracts. This is the maximum where the maximum volumes are located at all. And now pay attention, dear colleagues, there are no more option contracts at the top. They remain only at the bottom. And we will not suppose these accumulations. If any of you are interested, you can write me in the comments about what clusters are actually there. But believe me, there's a cluster of option contracts in puts. And this is basically the level of expectation by the professionals. The prices here are on the order of 70, $80 billion or more. Please look at this instrument, the S&P 500 index. Permanently rising for 2 months, almost non-stop. But look at what happened in the last week, Tuesday through Tuesday. According to the Commodity Futures Trading Commission, there was an increase of 87 sellers. That is, the trading instrument has been rising permanently without any practical corrections. But all of a sudden, out of the blue, the market saw an 87% increase in sellers as compared to buyers. Look at the increase in capitalization of the trading instrument by 15%. So sellers came into the market and brought a lot of money with them. 15% of that is over $200 billion. Over $200 billion of sellers came into the market. With that much money, they know something. So let's believe them. And dear colleagues, let's continue to consider both investment and speculative on American indices, namely the S&P 500 index and the Dow Jones index. On the Dow Jones index, 31,000 is still the target level. By the way, that right there is 6,000 points. Those prices are a very sweet position, very, very sweet. Well, dear colleagues, thank you very much for listening. Please write your comments. I'll always answer you in the comments. Come to the ForexTimes community. Don't miss the great entries. Once again, on the Canadian dollar, on WTI oil, and on the Swiss franc. Thank you very much, dear colleagues. Bye-bye, bye-bye, bye.